To Italy now, where a two-speed global economy is overshadowing this week's G7 finance ministers meeting. Officials are confronting the prospect of less synchronised monetary policy amid a resilient US economy and tepid growth, relatively tepid growth, though there are some green shoots coming through in Europe. Let's get more on this story then with Bloomberg's Oliver Crook, who is on the ground for us at the event in Italy. Good morning, Ollie. Can the G7 then tap in to these Russian assets to support the war efforts in Ukraine? This has been a debate that's been unfolding. The money is sitting there in some form. Are they going to be able to access that and come to an agreement?
Yeah, Tom, that's really the big project for the finance ministers here, is to really get that architecture in place in order for the G7 leaders to sign off on it in about 3 weeks' time. How do you monetize those assets that from the Russian central bank being held all across the world, but really mostly in Europe, and get them to Ukraine? And remember, the debate has been between the United States and Europe. The United States wants to seize the underlying assets. Europe says we're not comfortable with that. And so what they want to do is basically front load a large chunk of that money based on the future profits of those assets. Now, that may sound like a sort of good compromise, and on the top level there has been some agreement on that, but have a listen to the Italian finance minister speaking to us yesterday about some of the hiccups.
I have to be optimistic. It's not easy. The problem is how we are able to use the future window of profits to build a loan facility to Ukraine, but I am sure that we are able to make some progress, and perhaps for the next political summit in Apulia could achieve a solution.
And really, I was a little bit surprised by his tone, the tone of skepticism. This is the G7. This is a sort of an event and a group of people who should really be able to get consensus to move forward on this in what is a war of attrition, Yellen has called. And if there is not the sort of resilience and the will at the G7 to do it, then that will be a real problem for Ukraine. Now, the debate seems to be centering around what happens if, say, the war ends in about 5 years and you've committed the future profits of those Russian assets. Who is on the hook for that? That is going to be the discussion here between the United States and the G7 and all the other peers, and really in a critical moment for them to show some unity in the face of this aggression towards Ukraine by Russia.
Ollie, I know you've been thinking about this as well. Maybe it's a question of unity or lack of unity. The question of China, the question of how the G7 approaches China, particularly when it comes to the question of trade. How is that theme likely to filter through these meetings?
Yeah, Tom, it's a really interesting question. It's not technically on the agenda in the terms of that China has not been mentioned by the sort of communiques, but it's something that Yellen yesterday, she said front and center, this is one of our priorities. We need, once again, the G7 to have a unified front against the sort of Chinese overcapacity, which is, the idea that they're producing a huge volume of all of this inventory and dumping it onto the market. Where it gets interesting, Tom, is the United States has thrown up trade barriers on EVs and a number of other things. The Europeans, we expect to get those tariffs in the next couple of weeks, the announcement there. But the interesting thing is when the United States moves on this stuff and moves quickly on tariffs, where does that overcapacity go? A lot of it comes right here into Europe. We saw that happen with the solar industry and happening elsewhere. So really, this is a forum for the G7 to discuss that and, again, to try to navigate what could be. And, again, this is a question I will be having for a lot of the ministers and central bankers here. Are we heading towards another trade war? And I think that that looms large over this whole discussion here.